Alrighty everyone, this is Taylor filling in for JC on the nightly video tonight. So I want to take a look at a couple of things with you. First and foremost, let's start off with Google. So Google just looks rock solid here. And I think, when we live through those little short-lived, bursts of volatility and the market is getting sold off a little bit, us as retail traders, it's a great time to watch how the big money kind of shows their hand, so to say. So in the midst of the volatility, they're selling Amazon, they're selling Apple, Tesla, Nvidia, Facebook, etc. They weren't selling Google though. So unlike all the other names in tech and unlike, generally a lot of stocks out there, during the midst of that little bit of volatility, Google holds up really well. So if you take a look at the structure of the QQQ right now, finally things are looking a little bit better. So you got a couple closes back above the 21. Typically that's going to be the first step to seeing the end of the selling pressure. So we're looking better here. I'm looking at the volatility index. This is important as well, not just with tech stocks, but really any stock. Before we go hitting the ground running and jumping back into long positions, you want to see the volatility die back down. So, that's a huge kind of, criteria for me for taking a plan of action in the midst of the volatility. You're going to get a lot of good looking setups. You're going to get a lot of, quote unquote discounts. Some of your favorite stocks might be really, have taken a beating, trading at a price that you really want to jump in at. But generally the selling pressure is going to continue as long as the old VIX over here keeps on pumping. So before we get too aggressive jumping into swings back to the upside, typically we want to wait for volatility to die back down. So with the VIX back under the 21, the Q is looking a little bit better, and the SPY just looks like a total champ here. So the this week is going to be interesting. It's the first quarterly expiration of the year. Typically that's kind of a recipe for a total chop fest. What could be interesting is we're slowly approaching this, call it big psychological 4,000 level here for the SPY. So it will be interesting to see, do we grind towards that 4,000 this week and potentially pin towards that level? Or is this more so going to be your typical, witching expiration, and it's just kind of a lot of back and forth that ultimately doesn't really take the market anywhere? But for the Google here, awesome looking squeeze, got a really bullish structure. So for Google, we're focusing on that April expiration, and for me personally, selling those out the money put credit spreads with the short strike at 2,000. So I think here, based on the setup, this trade has a good probability, or this the stock rather has a good probability of making a directional move higher over the next 2 to 3 to 4 weeks. So if I'm confident of that based on the setup, I'm really confident it's not going to basically do the opposite and trade under 2,000. So I love the structure. I love that put credit spread. So that's a good looking swing for, 2 to 4 weeks down the road. For this current week, being that it's a quadruple witching, being that that's typically a recipe for a total chop fest, what we've been focusing on here in the options room this week are iron condors. So not so much looking for strength, not so much looking for weakness, more so looking for more of a choppy environment into Friday's expiration. So for the XPX, here's what we got working right now. So for Friday's expiration, we got 2 different iron condors. So on the put side for these condors, all right, let me speed this up. So for the iron condors, on the put side, we have short strikes at 3,900, and then we have short strikes at 3,850. And then on the call side here, we have short strikes at 40.10, just above that big psychological 4,000. And then we have short strikes on another condor at 40.30. So essentially on these trades here, all we need come Friday is for the SPX to close somewhere within this range, and we're going to walk away with some nice premium. So a big part of being an options trader is taking what the market has to offer. Not always, but a lot of times during these quarterly expirations, things are going to be pretty choppy, and the directional trades can be a little bit tough, where the non-directional trades, the iron condors, they can be pretty smooth sailing. So we're rocking with a little bit of that, and aside from that, just looking for the next clean setup. So there's been a handful this week that personally have kind of gotten away from me. So I do love Starbucks, but I'm not going to get long Starbucks up here. I got to get long at the 21. So a good looking setup that unfortunately took off without me. And this is kind of the name of the game. You focus on building a focus list, building a watch list of these kinds of high probability setups, and then you just take the ideal entries. So Starbucks, never quite offered the ideal entry, and it was picture perfect. Eli Lilly offered the perfect entry and gaps down on some bad news. So goes the game. But that's what we're going to continue to focus on here in the short term, looking to milk those iron condors, and then as we're heading into April, looking for more setups like Google. So I hope your trading is going well so far for the month of March, and we'll talk to you in the next video.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me